Most people know Ford as the company behind the F-Series pickup, the best-selling vehicle in America for more than 40 years. Millions of drivers swear by it, and Ford's name is practically carved into US car culture. But behind the shiny sales numbers, something's going terribly wrong. Ford is spending an unbelievable $25 million every single day on recalls and warranty fixes.
Ford is recalling more than 850,000 vehicles. Yes, you heard it right. Ford, who now is the leading recall in history.
In just one quarter of 2024, they burned through $2.3 billion fixing problems that should have been caught before cars even left the factory. It's a strange thing to see, isn't it? A company that's a household name, selling the most popular truck in the country, and yet, it feels like it's on a wobbly foundation. You'd think that being number one for so long would mean everything is perfect, but that's not the case for Ford. This is the central paradox we need to talk about. On one hand, you have the F-Series, a cash printing machine that has dominated the market for decades. It's a symbol of American industry and reliability. But on the other hand, you have a company that is bleeding money. The costs for fixing faulty cars are skyrocketing. In 2014, Ford spent about $4.8 billion on warranties.
Last year, Ford spent $4.8 billion fixing customers' cars, and that is roughly 3 times higher than industry standards.
By 2023, that number had jumped to a staggering $11.5 billion. Think about that. Their repair costs more than doubled in less than a decade. It's like a hole in the company's pocket, and it just keeps getting bigger. It's no surprise that investors are getting nervous. They look at the company's balance sheet and see red flags everywhere. For example, a key way to measure a company's value is its P/E ratio, or the price-to-earnings ratio. In simple terms, it shows how much investors are willing to pay for every dollar of a company's profit. A high P/E ratio suggests investors have a lot of confidence in the company's future growth. Ford's P/E ratio is sitting at an incredibly low 6.32. To put that into perspective, the S&P 500 average is closer to 20. That means investors are not only concerned about Ford's current situation, but are also very pessimistic about its future. The company's standing in the S&P 500 index tells a similar story. The S&P 500 tracks the 500 largest U.S. publicly traded companies. It's like a who's who of American business. Ford has slipped all the way down to 494th place, almost off the list entirely. It's a huge drop and a major signal that something is seriously wrong with the company's financial health. So, how did a company with such a strong brand and a wildly successful product end up in this situation? The problems go deeper than just a few bad cars. Ford is currently battling a three-front war. First, let's talk about debt. Ford has a mountain of it. By the end of 2023, their total debt was pushing $150 billion. A simple way to measure this is the debt-to-equity ratio. This ratio compares a company's debt to the money invested by its owners. For Ford, this ratio is 3.59. That means for every dollar of company ownership, they have almost $3.60 in debt. For comparison, the industry average is around 1.01. Toyota's is about 0.6, and BMW's is around 1.17. So, Ford is carrying an insane amount of debt compared to its competitors. The second part of this triple threat is quality control.
For older vehicles, apparently they've been having a lot of quality problem concerns, particularly in a lot of its more older vehicles.
This is the issue that's costing them $25 million a day. When a company has to recall millions of vehicles and spend billions on fixes, it's not just a small problem. It's a breakdown in their entire production system. For example, in 2020, Ford recalled over 700,000 vehicles because the rear-view cameras would just shut off. That's a huge number, but it gets even worse. Just 4 years later, in 2024 alone, they issued 37 different recalls. That included 2 million Ford Explorers and almost 800,000 other models for various electrical problems. What makes this even more troubling is the company's defect rate. When Ford launches a new model, their defect rate jumps by 70%. The industry average for a new model launch is only a 20% increase. This means Ford is consistently having massive problems with new cars, and it's costing them dearly in repairs and lost trust. When an analyst on a recent earnings call asked, how can investors really build confidence in an earnings trajectory when every year the surprise warranty issues keep happening, Ford CEO Jim Farley could only say that quality is their #1 priority. But the numbers tell a different story. And finally, the third and most visible part of Ford's crisis is the EV gamble.
Ford has announced it's investing $4.5 billion towards developing electric cars. The company has also promised to add 13 new electric cars and hybrids to its lineup by 2020.
This is where things get really interesting and where the company's debt problem collides with its future plans. For years, Ford watched from the sidelines as companies like Tesla dominated the electric vehicle market.
Tesla still dominates the market and will dominate the market at least for the next couple of years, so to speak.
Then, in the late 2010s, they decided to jump in head first. They formed a dedicated group called Team Edison in 2017 to focus on building an all-electric vehicle. Their first big move was the Mustang Mach-E in 2019. It was a stylish electric SUV that got a lot of buzz.
The Mustang Mach-E starts around $45,000 and goes on sale in late 2020. For more on the LA Auto Show, check out consumerreports.org.
But Ford's real golden ticket was the F-150 Lightning. They took their best-selling product, the F-150 pickup truck, and made it electric. The idea was brilliant. Give their millions of loyal customers the same reliable truck they love, but with an electric motor. It worked. The F-150 Lightning became the best-selling electric pickup in the U.S.
So when we talk about electrification, to be meaningful in the market, you've got to sell a lot of units. Ford makes the best-selling vehicle on the planet, the F-150.
And Ford shot up to become the second biggest EV seller in the country, right behind Tesla. On the surface, it looked like a massive success. The Mach-E sold over 40,000 units in 2023, and the Lightning sold over 15,000. These numbers sound impressive, but let's put them into perspective. In 2023, Ford sold almost 2 million vehicles in total. Their EV sales, all their electric vehicles combined, added up to just 64,000 units. That's a tiny 3.2% of their total sales. It's a small slice of a very big pie, and this is where the gamble turned into a disaster. Ford spent billions, not millions, but billions, to get into the EV game. We're talking $11.4 billion for 2 new battery plants.
In today's Tech Bites, EV plans for one of the big three. Ford is reportedly set to announce plans for a $3.5 billion battery plant in Michigan. Automotive News says the company will reveal efforts to rapidly scale EVs to make them more accessible.
$1.8 billion for an EV manufacturing plant in Canada, 2 billion euros for an EV plant in Germany. And that's just a few of the huge investments. In 2022 alone, Ford committed $50 billion to its EV future. Remember that mountain of debt we just talked about? A huge chunk of it went into building these plants and developing these electric vehicles. The problem is, EVs are a money pit. They require completely new factories and supply chains, and they're expensive to build. But even with all that investment, the market started to turn against Ford. It all started in 2022 when Tesla began a brutal price war. To fend off competition from companies like BYD in China, Tesla slashed the prices of its Model 3 by 6% and its Model Y by 11%. This forced every other company, including Ford, to follow suit. Ford had to cut the price of its F-150 Lightning by as much as $7,000. Suddenly, the EV market wasn't about who could make the best car. It was about who could sell it for the cheapest price. This put Ford in a terrible position. In the first quarter of 2024, Ford's EV unit reported losses of $1.3 billion. That means for every single electric vehicle they produced, they lost $130,000. This wasn't a sustainable business model. It was a financial sinkhole, and it only got worse. For the full year of 2024, Ford's EV division reported a $5 billion loss. They expect the same amount of losses for 2025. To make matters worse, governments around the world started pulling back on EV subsidies. Germany ended its program in December 2023.
Here's a big surprise, and this is going to shock the globe. Germany ends its electric vehicle subsidies immediately.
And soon after, New Zealand, France, and Sweden followed suit. Buyers were also getting cold feet as the initial hype wore off. Ford finally had to admit defeat. They canceled an upcoming EV SUV and wrote down most of their EV investments as a loss. They also announced they would cut their EV spending and reduce production of the F-150 Lightning. So, you have a company with an insane amount of debt, a major quality control problem that is costing them billions, and an EV division that is hemorrhaging money. It's a perfect storm. So where does that leave Ford? They've been trying to fix things, but it's a slow and painful process. The CEO, Jim Farley, has been trying to reassure investors that they are committed to fixing the quality issues, but analysts are skeptical. As one Morgan Stanley analyst put it in a recent earnings call, "You said that Ford's a different company from what it was 3 years ago, but the stock market really doesn't seem to agree with you at all on that." This is Ford's biggest challenge. They have a credibility problem. The company's actions haven't matched its words, and investors are losing patience. It's hard to bet on a company that keeps saying things will get better while the numbers keep getting worse. The brand is also taking a hit. When people hear about recalls and quality issues, it damages the trust they have in a product. The F-150 is the best-selling truck for a reason. It has a reputation for being tough and reliable. But if Ford can't fix the quality issues in its other cars, that reputation could start to crumble. Ford is at a crossroads. They can't just abandon their EV investments completely. They've already sunk tens of billions of dollars into new factories and technology. But they also can't continue to lose billions of dollars a year on electric vehicles. They have to find a way to make their EV business profitable while also fixing their core quality control problems. The company has a long history of survival. Aside from new EV makers, Ford is the only American car company that has never gone bankrupt. But history is just that, history. It doesn't guarantee the future. The F-150 Lightning is a perfect symbol for this. It's an innovative, successful product that represents Ford's future, but it's also at the center of a financial black hole. It embodies both the company's potential and its current struggles. The road ahead for Ford is filled with a lot of challenges, and only time will tell if they can navigate them and get back on solid financial ground.